My dividend cash flow portfolio paid me nearly $900 for the month of July. Not only are we going to review my strategy and overall results on cash flow as well as overall portfolio value, we're also going to compare my results against the S&P 500, the NASDAQ 100, QYLD, SCHD, DEVO, as well as a new dividend ETF based on your guys' requests in the comments. And make sure to stick around to the end of the video because we're going to do our second Average Joe Investor Live Q&A based on your guys' questions. Alright guys, here's my July 2022 cash flow report. I added a new section over here for 2022 year-to-date performance just to track not only just what we're doing so far overall, which is what we see right here, and not only just for the month, but also how we're doing year-to-date. And we'll look at some graphs at the end as well. So we're just going to jump right into it here. We're not going to waste any time. First thing we're going to do here is look at our overall portfolio balance and compare it to where we started back in January 2021. Now these numbers are going to include not only contributions but also reinvested dividends. Just for your awareness, in case this is the very first cash flow report you're looking at here, what I've done with this report is I've taken my actual results, my portfolio, both my high yield dividend portfolio combined with my core portfolio where I sell options in addition to owning dividend stocks. I took that information, I track all of my contributions for the entire period starting January 1st, 2021 all the way through present, July 2022. And then what I do is I take these same assumptions and I plug them into other investments as well. Meaning if I started with a lump sum amount, which I did, $52,000 January 2021, just because I didn't have data to go farther back. And then what I do is I say, if I invested $2,000 or $500 or whatever the amount was on a certain date, I would then assume I invested that same amount of money into these other investments to see how my portfolio did compared to others. We're comparing my portfolio right here against the NASDAQ 100, QQQ, the S&P 500, the SPY ETF, Schwab's SCHD, which is a great dividend ETF, very balanced. Then we've got the Amplified DIVO dividend ETF, which pays monthly dividends. Then we have the Global X NASDAQ 100, aka QYLD. And then lastly, we've added the JP Morgan Equity ETF, JEPI. JEPI here, just because I had a lot of people say that they wanted to see how those results compared to my own portfolio. So the assumption was we started with $52,173.16 on January 1st, 2021, and here are the overall portfolio results as of July 31st. And I'm still in first place here. My portfolio is worth $160,449.55. Second place goes to right here, SCHD at $153,799. Third place is JEPI, $151,000. Then in fourth place, we've got 145 here for S&P 500. Then we have DEVO 140, the NASDAQ QQQ 132,837, and then lastly, QYLD 132,318. This is overall portfolio balance since the beginning of the portfolio. Next up, let's take a look here at July 2022 performance. We'll take a look at overall portfolio value, which I think you guys already know, and we'll also include the overall portfolio gain or loss during the month. All right, so we can see here that my portfolio, while it did go up, all the portfolios were positive for the month of July. The top result was actually the NASDAQ 100 QQQ, which was up 15.09% on the month. Then we've got second place going to the S&P 500, 11.44%. Then third place goes to QYLD, surprisingly, at 8.80%. Then my portfolio was up 7.29%, followed closely by DEVO at 7.19%. Then we've got JEPI at 6.7%, and then lastly, SCHD up 5.84%. Now I've said this before, and I'll say it again, and I will say it every single month, guys. My portfolio, its primary purpose is not overall portfolio balance. In fact, if I could choose, I would have my portfolio stay flat as much as possible, because if it stays flat, it means I can add more shares of my underlying investment. For me, it's all about cash flow, not at all about portfolio balance. Now the reality here, we've got QQQ, we've got SPY and SCHD. They all pay quarterly dividends, and they did not pay dividends in the month of July, so they're all flat at zero. First place goes to JEPI, $1,590.73, followed by QYLD at $1,260.06, followed by me at $884.37, and then last place, DEVO at $588. I gotta be honest with you guys, I was shocked at the results here for JEPI. Not necessarily the overall value, I mean, that's fine, 151 here is great. I'm just shocked at the nearly $1,600, and I was looking and deep diving into this, I was realizing it's not a matter of them yielding a lot right now necessarily. They're yielding around 9%. The big thing was they just accumulated a ton of shares. Their price has been very steady. We haven't seen a lot of ups and downs on the price. It's kind of fluctuated between about $55 and $60 per share for nearly the duration of the time frame. And as a result, a lot of these contributions I made to the account that also went to JEPI to make it an apples to apples comparison led to a lot of shares, which are leading to a lot of dividend income. To be completely honest, if we look at my cash flow, let me just go ahead and show you my cash flow for the period. You'll notice here, $377.46 went to actual dividends earned during the period. This was just one of those months where I didn't get as much dividend income because not as many of my companies were paying dividends. I did receive, though, $506.91 in option premium in addition to my dividend income, which led to the total result. And truth be told, I was a little bit more conservative with my option premium, the options that I sold for the month of July, just because the majority of my positions were below their cost basis. So I decided to go and sell them at a lower delta, which led to lower premiums. But there were also just times where I just didn't sell options because I was busy with other things. I was out of town for a number of weeks and I just wasn't as actively in my portfolio as I normally am. And I missed opportunities to sell options earlier in the month on really high days. So yes, there's probably opportunity for this number here to be closer to maybe $1,000 or so, give or take, maybe $1,100 if I had been more proactive in my portfolio for the month, but it's fine with me. $884 in cash flow is still great. All right, let's take a look here at 2022 year-to-date performance. What I do find interesting here is that you'll notice that despite the fact that all the portfolios were negative year-to-date, my portfolio was almost completely flat. I'm only down 1.18%, and this is isolating and not including any of our contributions. So we're saying what was the balance at the beginning, what was the balance at the end, and then subtracting out all of the contributions during that time frame to see what was the actual overall portfolio change. JEPI was second place here, down only 5.78%, followed by Devo at 7.05%. Then we've got Schwab at SCHD at 8.21% down. Then we have QYLD down 11.7%. Then we also have S&P 500 down 14, and then QQQ down 22.31%. And again, portfolio balance, not that big of a deal to me. If my portfolio was down 20%, I would actually be pretty excited because it means that I'm picking up more shares, which is going to lead to more income in the future. It's just the reality is I was only down 1%. And then lastly, let's take a look here at year-to-date cash flow. My portfolio in first place, $12,100 year-to-date cash flow, followed by $82.94 with JEPI, $74.29 with QYLD. Then we've got Devo, $3,996, SCHD $23.83, and then SPY and the NASDAQ 100 here only around $381 and $977. Now I get it. This is not an apples to apples comparison when it comes to cash flow. I'm just including all these portfolios just for awareness on overall portfolio balance as well as cash flow. And we're just looking at two different metrics here. A lot of average Joes out there will just stick their money in the S&P 500, and that's perfectly fine, which is why I include my portfolio compared to these, because there are different methods to making money in the stock market. I get that it's not an apples to apples comparison on cash flow, but it is apples to apples with QYLD, with DIVO, with JEPI, as well as with SCHD. All right, here's our monthly income breakdown. You'll notice 2 out of every 3 months for the S&P 500 and the NASDAQ 100, there's just no income there because it's quarterly. Let's go ahead and remove those quarterly pairs, the S&P 500 and the NASDAQ, just to make it a little bit less complicated here. So we've got yellow is QYLD, and their income was clearly much higher overall going back to 2021, though it's much more competitive here in 2022 because I've been more aggressive in my option writing. Purple is SCHD, which again is a quarterly payer. But really, if we look here at 2022, I was really selling a ton of options here in January. I was doing an experiment where I was almost using my entire portfolio to sell options, whereas I've actually gone more to like a 60-40 split here between a core option portfolio as well as a high yield dividend portfolio. And then we've got black, which is average Joe portfolio, and then we've also got JEPI, which is in dark blue, which is a terrible color given the other 2 colors. Let's change this. There we go. JEPI is in orange now. We can see that JEPI is also very competitive on the monthly cash flow. Here's our quarterly income breakdown. We've got QYLD very competitive here, as well as the average Joe portfolio, which is doing pretty well, as well as JEPI here, very competitive as well. I'm again really shocked by JEPI, and to be completely honest with you guys, I'm actually really thinking as the overall market gets a little bit better right now, a lot of my positions in my high yield dividend portfolio are back to flat or even up on the month. I think I'm up almost 20% on one of my energy stocks, and I'm thinking to myself, the goal of this side of the portfolio is high cash flow, high yield cash flow. So I'm thinking about switching out some of my very non-diversified positions, exclusively one real estate investment trust or one energy stock here that's yielding 5, 6, 7%, and thinking, well, why don't put maybe $10,000 to $12,000 of this portfolio into something like JEPI, which is going to give me more cash flow, which is the whole point of that segment of the portfolio. And we've also got the overall portfolio balance over time. Okay, this is all reinvested dividends, all contributions together. My portfolio is in white and it's a little bit jagged because I don't keep track of the overall portfolio every single day of the month. So this number right here is the actual portfolio balance for the month, and then it pops up for the next month. Not a perfect representation, but it does the job. You'll notice that for the majority of the time, QYLD is one of the lower performers, but here at the end, it's almost the same value as the NASDAQ 100 right here. In purple, we've got JEPI up here, followed closely by SCHD, and then also in yellow, we have Devo right here. These are all dividend investments, whereas right here in blue, the S&P 500, and in green, the NASDAQ 100, very low performers overall in portfolio balance, though everything got a big pop up in the month of July, especially QQQ and the S&P 500. And one of the things you'll notice here is that, besides the fact that my dividend income was actually not that great for the month of July, just because it was one of my down months, some of my investments here do not have a lot of volatility and thus do not have a lot of option premium. A few examples here are Comcast doesn't have a lot of option premium. Same thing with Colgate-Palmolive and also Verizon Wireless. So these are a few positions that I'm actually thinking of actually swapping out and actually having them get assigned so that I can move on to other investments that are still high quality dividend investments but have a little bit more volatility in their overall stock price, which is going to lead directly to more option premium, more cash flow. All right, guys, time for our Average Joe Investor live Q&A. Recorded voicemails sent from you guys to me to answer here live on my videos. Today's Average Joe Investor live Q&A is sponsored by Moomoo. Unrivaled customer service. You get free real-time level 2 data, and they were awarded with Best Trading Platform 2022 by FinTech Breakthrough Awards. Check it out, guys. Moomoo has an epic special offer for the Average Joe Investor audience. You get one free stock valued up to $3,500 just for opening up a brokerage account, an additional one free stock for depositing at least $100, an additional 3 stocks for depositing $2,000 or more, and as an additional offer here, do not wait, a summer exclusive, an additional 5 free stocks with any deposit. Don't wait on this, guys. It ends August 7th at 11:59 p.m. So today's question comes from Peter. Let's take a listen.
What is your intake on ticker symbol USOI and its current high dividend, and how it's being affected with current pricing on oil, and where do you think it's going to go from here?
All right, so this is a great question, Peter. USOI, for those of you that are not familiar, it's a unique type of investment. It's not an exchange-traded fund. It's not a stock. It's technically what's called an ETN, or an exchange-traded note. It's kind of like a hybrid between a stock and a bond because there's no underlying investment. You don't own shares of a corporation. You're not a partner in a partnership. Instead of receiving dividends, you get coupon payments just like with a bond. So USOI is the Credit Suisse X-Links crude oil shares covered call exchange traded note. That's quite a handful. It's a secure unsecured debt issued by Credit Suisse. It pays a variable, so it's going to adjust, a variable monthly coupon based on option premiums, if any, generated by the index's hypothetical monthly sale of call options on the shares of the United States Oil Fund, USO. So essentially what they do is they have a long position, which means they own underlying shares of USO, and then they go and they sell covered calls and they pass all of that option premium over to the investor. Now, it's a little bit, like I said, a little bit of a different investment because you don't have a real physical ownership here. There's no guarantee you're going to get your underlying investment, though they have been paying very significant option premium income. First thing I want to call your attention to is that this fund does not have great returns. This is overall performance. Okay, 1 month down 10%, 3 months down 14%, year to date down 9%, the 1 year they're down 12.87%, and their 3 year down 76%. USOI just kind of fell off a cliff here when it came to what happened with COVID. These are the results: USO versus USOI versus XOM, just 3 different energy investments, right? USOI is the covered call ETN. Then we've got USO, which is the United States Oil Fund. Then we've got XOM, which is ExxonMobil. You can see here over the past 6 months, the investments don't look terrible against each other. You can see USO definitely outperforms, but if we scroll out here, just zoom out here, you can see what happened with COVID, right? Right here, the blue line, this is USOI. It dropped from way up here. It was at $21.64 per share, and then like a month or two later, it was down to right around $4. And it's kind of been flat ever since then, continuing to pay out that ultra high dividend. And again, remember the price was only $4.85 per share. If we scroll down here to the actual coupon history, their dividend payments, in 2022, they were going to pay out $1.27 per share annualized, and that's quite a bit. You can see they vary here month to month, from down as low as 14 cents to as high as 25 cents, then down to 16 cents here. So pretty significant dividend payments. Let's go to Portfolio Visualizer and backtest the portfolio to see how it compares to USO. So this is essentially, 19 months here. USOI would be worth $16,000, given that initial investment of $10,000, whereas ExxonMobil would be worth $25,000 and USO would be worth $23,000. So to answer your question, Peter, USOI is a very unique investment. It's one that I don't own in my portfolio. It's just a little bit too unique. I don't like the idea that I don't have any underlying ownership or value in the underlying investment. I much prefer to have ownership in a corporation or shares of a partnership if it was a master limited partnership. It is an interesting investment, and I know that there are other people here on YouTube that own this investment that do get significant dividend income, and you can accumulate quite a few shares. At the end of the day, though, it's just not one I feel comfortable with. As long as energy is big, it's still going to continue to probably have significant option premium, because when it comes to energy, there's a lot of volatility, and when it comes to volatility, you get a lot of option premium income. Long and short of it is, here is one that I don't own, but I get why some people might have maybe a portion of their high yield dividend portfolio in this investment. I really appreciate your question, Peter. Make sure those of you that have questions or concerns about your dividend portfolio, your cash flow investments, you have a question about specific investments you own already or you want to buy, feel free to leave me a voicemail. Check out the link down in the description below, and I'm more than happy to feature your question and my unique answer on a future video. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.